For today's highlight in Thursday, first of all, we open up, what were we? 60% bearish. Bearish yesterday. Thursday or Tuesday was like a turnaround reversal day. They followed through yesterday. We open up, we're 25 points lower. Everybody's bearish, and you should be. There's nothing wrong with that. 60% the poll showed. When we open up, which is right here on the right side of the chart, first thing is you got to be careful just coming in and selling it. There was a consolidation box that was quickly setting up right here. You could see it as we're banging through it. And I said, you got to be careful short through 86 because number one, we're in that breakout mode. The bigger the volume coming in, the more prices you cover, the faster you're moving, the more breakouts they're going to tend to happen. So when I say buy stops above and they come out, it doesn't feel like a good guess. Number one, it keeps you from taking a short position and then wearing it right away, or maybe even taking a shot and getting long, right? And that's what's important. So it's not, let me pull this pen. So sure enough, we pop right there. After you see the top of this kind of identified, we have a nice pop and there's a nice continuation. All right. So now here's the thing. You always think in a, let's say, weak session like we started in, is there going to be down? Is this just a shakeout of shorts, a short covering rally? Or is it the beginning of a lot of strength? First thing is you have to give the bulls credit and say, right now the bulls are in control. And I had said there should be support. If you looked at another chart that we use, I think it was just a couple 3 points underneath the top of this rally. When it wasn't support, and we very quickly knew that because it chopped around the, here, you'll see it as I go forward. There was a little chop around the 90s. At this point, it's like this now becomes a short covering rally and we're weak again. Not that right away I said 88 to 84 and then we're going to go to 55 and whatever the day session low ended up being. But the fact that they couldn't hold a rally, so the bulls quickly gave the leash back and this becomes a short covering rally and the bears take over again. And guess what? There are less shorts here than here. Why? Because they all got, a lot of them got shook out on the rally to 94. And like I say all the time, if you have less shorts, you have less buyers. And if you have less buyers in the market of anything, price action generally downside, right side. So as you go through any day, you try to read real time as effective as possible and try to give yourself a sense, is this a new move that's going to be retraced? Or is it a retracement of a prior move? Who's in control on this time frame? What's the overall context? The transitions from bullish to bearish. There's nothing wrong early on knowing 386 there was going to be a breakout. Bulls are in control. What's better is to know when the bulls give the leash back in that transitional moment so you're not fighting it long all the way down. And I had specifically said there is a lot of pressure when we were like in here. There's a lot of pressure on this market because everybody who doesn't know how to get out of trades are buying it, buying it, and buying it, and buying it. And they're getting stuck long all the way down, which is creating a lot of selling because after you get long, you now are a seller. And a lot of longs that are picked off in that area are all trying to now sell it and keeping an awful lot of pressure on the market. End up driving us down to what ended up being the lows of the day. When we came out of the hole is when you could start saying, well, maybe the lows are in, or maybe give the bulls credit that's not a short covering rally. They probably shook out enough longs to go up. Let me fast forward that into here. When did that happen, guys? I think that happened where early on you could start, excuse me, early on you could start saying that because it's too late to say it when we're trading 28 even or 28.12. I think I went too far. Right in here. You're not supposed to try to fight it and predict every move. Every move up, that's the low. Move up, that's the low. You're not supposed to do that. What you're supposed to do is is there a sequence where we rallied enough, surprising people, let's say in that box, getting through there, and at some point you're like, you know what? And I don't know where I said this at in this rally, but I said that this rally now is the new move. And now the Bulls have a chance, if they could hold 50% of the move, they have a chance to keep the upside the right side. How high is it going to go? You know, that's something. And as you go, where are your upside magnets? Where's there some liquidity above? But this keeps you on the right side based on this being a new move. Ultimately, it was 28.12, and it's not because I wear a genie costume. It's because, let's get rid of that. It had a lot to do with yesterday's close, and then the middle of this consolidation. Look at that. This is a 24 PNF, so it's a longer time frame chart. Look at the center of that consolidation and then this congestion. There's no coincidence that that's where it went, stopped and went the other way. Doesn't mean you could lay an offer there and make a ton of money. That means you just have a target that makes sense. And if you see enough shorts that puke going into that, transition might be coming off from there. So it's a better way to read patterns on a chart. Is it on a rally? Is it a short covering rally, which means we still have some downside pressure, or is it the beginning of a transition? The bears give the leash to the bulls. Constantly are asking yourself the right questions, you'll find the right answers.